Picture this. NVIDIA and AMD, the undisputed giants of the graphics chip world, have long relied on China as a massive, lucrative market. For years, China has been a key driver of their explosive growth, with millions of chips shipped every year to power everything from personal computers to the world's most advanced supercomputers. Their cutting-edge chips are the beating heart of gaming PCs, the brains behind AI data centers, and the engines of scientific research. These chips fuel innovation, push the boundaries of what's possible, and rake in billions in profits for both companies. But now, the US government has stepped in with a game-changing rule, a sweeping new policy that slaps a 15% cut on every high-end chip sold to China. This isn't just a tax, it's a strategic move with global consequences. This isn't a minor tweak, it's a seismic shift that's sending shockwaves through the entire tech industry. Imagine selling lemonade for $1 and suddenly losing 15 cents per sale. Your whole business model changes overnight. Suddenly, what was once a sure bet is now a risky proposition. The tech industry is reeling, with Wall Street investors, engineers, and global supply chains scrambling to adapt to this new reality. Companies are urgently re-evaluating their strategies, and uncertainty is everywhere. For NVIDIA and AMD, it's a direct hit to their China revenue. A market that once seemed unstoppable is now under threat. For China, it means pricier, harder to get technology. Consumers and businesses alike are feeling the pinch, as shelves empty and prices climb. For the US, it's a bold, risky move in the global tech rivalry. A high-stakes chess match where every decision could tip the balance of power. This isn't just about money, it's about power, control, and the future of innovation. The ability to shape the next era of technology is on the line. The ripple effects are just beginning, and every player, from CEOs to engineers to governments, is rethinking their next move in this rapidly changing landscape. The stakes? The price of your next graphics card, the pace of AI development, and the very shape of the global tech map. What happens next will affect everyone, from gamers to scientists to everyday consumers. One policy, and the entire industry is on edge. The game has changed permanently. The future is uncertain, and the pressure is on. And the world is watching, waiting to see who will make the next move in this high-stakes global showdown. Here's the core of the new rule. Every time NVIDIA or AMD sells a top-tier chip to China, they pay a 15% tariff to the US government. We're talking about the most advanced chips, the kind that power AI, scientific research, and military tech. This isn't about your average gaming card, it's about the technological heavyweights. The policy is laser-focused. Only the most powerful chips are taxed, not everything on the market. For Chinese tech giants, this means building AI and cloud platforms just got a lot more expensive. For NVIDIA and AMD, it's a direct hit to their bottom line and a new layer of political complexity. The US is now a middleman, making it harder for China to buy, while generating revenue to fund domestic chip manufacturing. It's a simple rule with massive, tangled consequences, reshaping profits, international relations, and the future of tech. The goal? Slow China's tech rise, fund US innovation, and keep the upper hand. But the fallout is just beginning. Every sale is now a political act. The world's tech balance is shifting. The US says this move is all about national security. It's not just a matter of economics or trade. Officials argue that the stakes are about protecting the nation's most sensitive technologies and keeping them out of the wrong hands. These chips aren't just for AI chatbots or consumer gadgets. They can power advanced military systems, next-generation weapons, and sophisticated surveillance networks that could tip the balance in global security. Washington fears that selling these high-tech chips to China could directly boost Chinese military and intelligence capabilities, giving them an edge in cyber warfare, missile guidance, and data collection. Economically, the US wants to keep its lead in semiconductors, a sector that's become the backbone of modern innovation, while China is racing to catch up and close the gap as quickly as possible. By making top chips pricier and harder for China to access, the US hopes to slow that race, buy time for its own industry to innovate, and maintain a technological edge for years to come. There's also the issue of fairness. US officials argue that China's heavy subsidies and closed markets have given it an unfair edge, distorting global competition and making it harder for American companies to compete on equal terms. The tariff is a counterpunch. If China plays by its own rules, so will the US. It's a message that America won't stand by while its industries are undercut or its security threatened. The money from this tariff is earmarked for building new chip factories in America, strengthening domestic supply chains, and reducing reliance on Asian manufacturing hubs that could be vulnerable in a crisis. The pandemic exposed just how fragile global chip supplies are, with shortages rippling through everything from cars to smartphones, and highlighting the risks of depending on overseas suppliers. By investing at home, the U.S. aims for security, resilience, and the ability to weather future disruptions, no matter what happens abroad. It's about more than profit. It's about control, competition, and shaping the future of technology for the next generation. The U.S. is drawing a line. Access to its best tech comes with conditions, and not every nation will qualify. The global chip game just got a lot more strategic, with every move carefully calculated and every decision carrying global consequences. And the stakes have never been higher, as the world watches to see who will control the future of technology. This chip war has been brewing for years, quietly shaping the future of global technology behind the scenes. What started as a simmering rivalry has now become a high-stakes battle for dominance in the world's most critical industry. It all began when the U.S. blacklisted Huawei, blocking American tech sales over national security fears and sending shockwaves through the tech world. But that was just the opening move. Soon, the U.S. expanded restrictions to cover entire categories of chips and manufacturing tools, targeting not just companies, but the entire supply chain. The goal was clear: slow China's ability to build its own advanced chip industry and limit its access to the world's most cutting-edge technology. In response, companies like NVIDIA started making China-only chips, products designed to skirt the rules, powerful but just under the export limits, allowing them to keep selling while technically following the law. U.S. policymakers quickly saw this as a loophole, so they tightened the screws, closing gaps and making it harder for companies to find workarounds. Now, instead of outright bans, the U.S. is using tariffs to make every sale to China more expensive and complicated, adding new layers of bureaucracy and cost. It's a flexible tool, not a total cutoff, but a big financial hurdle that forces companies to rethink their strategies and pricing. Each side keeps making moves, trying to outmaneuver the other in a contest that's as much about politics as it is about technology. The result? A global tech chess match, with every new rule and regulation changing the board and forcing companies to adapt on the fly. The 15% tariff is just the latest gambit in a series of escalating moves, signaling that neither side is backing down. The U.S. wants to keep its technological edge, while China is determined to find workarounds and develop its own capabilities, no matter the obstacles. The rivalry is escalating, and the world's tech industry is caught in the middle, forced to navigate shifting rules and rising uncertainty. Every move has global consequences, affecting supply chains, stock markets, and the pace of innovation everywhere. The chip war is far from over. The stakes are only getting higher, and the outcome will shape the future of technology for years to come. And the next move could change everything, setting the stage for the next chapter in this global tech showdown. For the U.S. government, the upside is clear billions in new revenue to fund domestic chip factories and jobs. It's a way to make China's demand for chips pay for America's tech ambitions. The policy could also slow China's progress in AI and advanced computing, giving the U.S. a strategic edge. But it's a risky bet. The tariff could push China to double down on building its own chip industry, creating a powerful rival in the long run. U.S. allies might see this as aggressive, destabilizing global trade and cooperation. The tariff also makes American chips pricier, risking lost sales to competitors in South Korea or Europe. If Chinese customers find alternatives, NVIDIA and AMD could lose market share, and the U.S. could lose its tech lead. Less revenue for U.S. companies means less money for innovation. The policy is a double-edged sword. It funds U.S. growth but could fuel China's independence. The global chip market is more uncertain than ever. The U.S. is gambling on control, but the outcome is far from certain. The stakes? The future of American tech leadership. And the clock is ticking. For NVIDIA and AMD, this policy is a major headache. China has been a huge, high-profit market. Now every sale there is less lucrative. They face a tough choice: absorb the cost and lose profits, or pass it on and risk losing customers. Uncertainty is bad for business, and investors are nervous. Forecasting future earnings just got a lot harder. Compliance costs are rising, with more lawyers and lobbyists than ever. Instead of focusing on innovation, these companies are tangled in geopolitics. The biggest risk? losing the Chinese market entirely if local competitors catch up. That would mean lost revenue and lost insights from working with top tech firms. The crossfire is real, and the long-term cost could be huge. Not everyone thinks this policy is a win. Experts warn China could retaliate by restricting rare earth exports, disrupting global electronics. A trade war could hurt everyone, not just chip makers. Critics say the tariff might backfire, pushing China to build its own chip industry even faster. Cutting off access could create a powerful new competitor, not weaken one. Some argue it hurts US companies more, slashing their profits and R&D budgets. That could let foreign rivals catch up. Others see it as protectionism, distorting markets and undermining free trade. The risk: a fragmented, less efficient global tech economy. Innovation thrives on open competition, not barriers. The debate is far from settled. So, who wins and who loses? US chip makers building new factories at home get a boost from tariff-funded programs. Rival chip designers in South Korea, Japan, or Europe could grab market share in China if American chips get too pricey. Nvidia and AMD are immediate losers. Lower profits, more uncertainty, and the risk of being shut out of China. Chinese tech firms face higher costs and slower AI development. But the biggest loser might be global consumers. The world's tech ecosystem could fracture with less collaboration and slower progress. Innovation could stall as countries build walls around their tech. The splinternet is becoming a reality. In the end, everyone who relies on fast, open tech loses something. The edge, it's up for grabs. This 15% tariff signals a new era: techno-nationalism. Governments are intervening in tech markets, prioritizing national power over global cooperation. Expect more export controls, tariffs, and domestic investment worldwide. The old unified global tech market is fading. Supply chains will diversify, but costs and inefficiencies will rise. Chip prices may go up, and innovation could slow. The AI race will split, with the US and China developing in parallel. The big question: will this strategy secure US tech leadership or create a powerful rival? The outcome will shape everything from your phone to the future of AI. The stakes have never been higher. The next chapter of tech history is being written, right now.